Time for the word on Wall Street. Top investors watching your money this morning. Joining me now, Thru the Cycle president John Lonski and Horizon Investments chief investment officer Scott Ladner. Scott, going to start with you. Looking at the futures right now, and they're sort of bouncing around here, indicated lower, but not by much. Seems like the market is a little bit tepid, right? Before we get this jobs report out at 8:30 a.m. Eastern time, we're expecting 300,000 jobs were added to the economy last month. Unemployment rate supposed to hold steady at 3.5%. What are you expecting?
In the best of times, Jackie, forecasting this number is sort of like a random number generator, and we're certainly not in the best of times. We're expecting a number right around there, but we wouldn't really be surprised by anything like 200,000 over or under that number. And the market kind of has built that in as well. I mean, there's a reason why futures aren't trading very much right now. The reason why they're sort of flat. The reason why we kind of rallied off the bottom yesterday. Is nobody really wants to put on large positions ahead of this number, which is going to drive a lot of what the Fed is going to do in their upcoming September meeting. Yeah,
and John, we're looking at the futures right now. Also, it's weird because it's Labor Day holiday. Yes, this is a big data point when it comes to the jobs report that traders watch, but we're also going into a long holiday weekend. So I think that would make sense, too, of why people wouldn't want to put on big trades at the moment.
That makes a lot of sense. I think futures are meaningless up until the jobs report comes out, and then we'll see what happens. Right now, of course, we're very much concerned with what's happening on the commodity front. Ever since the Jackson Hole remarks from Jerome Powell, we've had commodities drifting lower. We have copper down from where it was previously, aluminum and so on. This decline by the industrial metals reflects not only worry about the U.S. economy in the months ahead, it also can be ascribed to a global economic slowdown that includes China as well as Europe. And of course, Europe, the first thing you think about, natural gas. And there's a great deal of concern of a shutoff of supply from Russia to Europe of natural gas. And that could send natural gas prices skyward, regardless of a possible recession in Europe and with that higher interest rates.
And Scott, I just want to bring you in here because that's a great point on the commodity market, John. And it's something that we've been watching. It's like the market essentially thinks that this recession is coming and that this global slowdown is happening. And the administration can call it a transition or whatever it wants, but the reality is the reality. That's why commodities have come down, not because the policies have been working to tame inflation or anything like that at this point.
No, you're absolutely right. I mean, look, the market had pretty clearly moved on from inflation being problem number one to recession being problem number one before Jackson Hole. And the market thought that the Fed had sort of started to move on from that as well. The power of Powell's speech was to say, listen, the Fed has not moved on from inflation being problem number one. And irrespective of whether or not that we get a recession, they're going to get inflation down. That means that they're going to probably throttle growth even more than they probably need to or should. But you guys are absolutely right. I mean, the price action of commodities is completely consistent with a global growth slowdown and kind of teetering on recession. We'll see if we get there or not. But probably the odds slightly favor that we do dip into recession at some point. But commodity action is completely consistent with that.
Yeah, and we are watching oil prices really closely as well. Seeing the worst month since November, down more than 9%. So, John, you think about inflation, gas prices, oil prices, the economy, what Jerome Powell is trying to do with interest rates. Tell me how oil plays and where we are right now in this in the pricing, how that plays into this big picture.
Oil is incredibly important to the near-term inflation outlook. The month of August, we had the price of gasoline, month of July, we had the price of gasoline fall by nearly 9%. The CPI was unchanged. For the month of August, the price of gasoline, that decline deepened to 12%. And in turn, I wouldn't be surprised if we have another unchanged reading for the CPI in the month of August. That'll be good news on the inflation front. That'll bring the annual rate of inflation down to about 8.2%. The question then becomes, will it last? And what happens to these other energy components, such as natural gas, that could go sharply higher this winter if we do have a reduced supply of natural gas to Europe from Russia?
Yeah, it's going to be a huge issue. We are going to be all over these stories as we head into the fall. John's going to stick around. Scott, thank you so much.